please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Alright, on that note, let's also take a flight across the Atlantic and see the European markets. They actually closed fairly higher on Thursday as commodities related stocks as well as the retail sector was the one which rallied. We saw almost 1% of gains come by on both the French as well as the German indices. The FTSE, that one was limited in its gains as compared to the other two indices, but still knocked up close to about 0.75%. Across the periphery too, we saw some gains, but the pain point really came by from the emerging markets. The Russian index was down about 0.7%, trying to get a handle on what took place in the Brazilian index, because that one was down close to around 3.7%. Now I'm just taking a look at all these tech stocks in Brazil: BTW Digital, BRF, SA, Estácio, as well as Timpart, all of them losing anywhere between 6 to 7%. So the Brazilian tech stocks were the ones which were under a lot of pressure, taking that index lower by 3.5% actually in yesterday's session.
Okay, so significant cut seen in the Brazilian index, but let's shift focus to the world of commodities then. Brent crude, now that oil topped $80 a barrel for the first time since November 2014 as the market concerns over the Trump administration's efforts to sanction Iran's crude exports. Prices gave up gains in afternoon trade on concerns that Iranian exports could fall. Now, since we're on the subject of crude, let's bring in our in-house expert Manisha Gupta to tell us what is happening in this space. Manisha, good morning. So what are the reasons that oil is gaining, and more importantly, what does the outlook look like to you?
Well, even as we have seen prices gain up by 18% in last 2 months, and it's up nearly 22% now for this year. 3% of those gains have come in this week itself. The outlook for the crude oil prices, surprisingly, still is on the firmer note. As you said, that there is strong global demand. The Asian demand is at record highs. The ongoing OPEC supply deal for last 17 months has been able to bring down the global inventories to below 5-year average. And we are looking at a lot of geopolitical risk as well, and that is adding potential disruption to the supplies. All of that has been supportive. Iran, of course, is one major factor, and much of the premium in the crude oil prices has come in from that. But, going forward, it is going to be about Venezuela, and they have presidential elections on this weekend. There has been political and economic crisis in Venezuela. And not just that place. If you look at other OPEC members like Iraq, Libya, Syria, Yemen, we have seen decline in crude output from these countries as well. And that, of course, continues to support the prices. Going forward from here, even as markets have factored in the higher U.S. shale output, it really is going to be about the U.S. summer season demand. You also are looking at the weather concerns coming in as we move forward. So whether it's Goldman Sachs or Bank of America, Merrill Lynch, Morgan Stanley, all of them are talking about $90 to $100 a barrel of crude oil prices in next couple of years. So it continues to be quite bullish because of these banks speculating or giving a very high outlook on crude.
All right, Manisha, thanks a lot for that. That is something we will definitely keep watching out for. But let's also get in some opinion from Amrita Sen, who's the chief oil analyst at Energy Aspects, and Pranjal Bhandari, the chief economist at HSBC India, on their outlook for crude oil prices going ahead.
The markets are tighter. OECD inventories are now below the 5-year average. We have always had a price spike in our forecast for the last 2 to 3 years. We've always said that late 2018, early 2019, we are likely to go to $100 because of underinvestment. That's the other thing that you're seeing right now. Just supplies are falling everywhere other than the U.S. And of course, the Iran situation has just brought forward our forecast. Our forecast has been $100 for next year. And now, of course, we're seeing the likelihood that we could touch that this year.
Oil is a very important mover for India's macroeconomy, but this time it's not just oil, it's a lot of other things. It's, a reversal in oil prices, it's a reversal in the government's policy. A government which has kept MSP prices low for 4 years is finally raising them. Output gap is closing now, which hadn't happened for the last couple of years. The trade deficit is widening now, which hadn't happened for the last many years. So a lot of things are coming together. Our own analysis suggests that if a global oil rises by $10 and all of it is put, the burden is put on fiscal, basically say by cutting the excise taxes, it could increase the fiscal deficit by 0.3% of GDP.
Okay, in the currency space then, the dollar climbed to a 4-month peak against the yen, supported by the rise in US Treasury yields. Remember, the US benchmark 10-year yields hit a high of 3.122%, the highest nearly in 7 years. Well, back home on the Lal Street, the Nifty breached the 10,700 mark, ending about 0.5% in the red. The Sensex also shed about 240 points in trade. Banks managed to hold on to the 26,000 mark, ending around 100 points in the red. But the mid-caps, they outperformed yesterday with gains of 0.2% in trade. But how are the cues lined up for this Friday morning? Manglam, tell us more.
Well, you spoke about yesterday, so let's take a look back at all this week, and we've lost a lot of ground in this week itself. The Sensex and the Nifty, both of them are down by about 1%. Nifty Bank managed to hold on to that 26,000 mark, but still down about 1.3%. And while the mid-caps outperformed yesterday, all through this week, they've been down 1.8%. And if you take a look at the advanced decline, yesterday we opened with close to around 3.5 stocks in the green as against one in the red. And by the end of trade, both those lines came and kissed each other. We were at an even keel for one stock in the green and one stock in the red. So we need to keep an eye out on these things. Why? Because the macro chickens, they've come home to roost. Because if you take a look at the Government of India bond, it's closer to that 7.9% mark, making the cost of money a little more expensive and making the opportunity cost of investing in equities a little less favorable. US 10-year bonds at the highest level since 2011. We've been talking about that. USD INR closer to that 68 handle. That is something we have to watch out for as well. And the Brent crude, which is near $80 per barrel mark, is something we have to watch out for primarily because I was going through the budget documents and the India budget, Union budget FY19 has assumed FY19 oil prices to be at $57.5 per barrel. From there on, just 2 months into this fiscal, the oil prices have actually moved to $80 per barrel. So that is something we need to watch out for. Headlines from the world. Just a few weeks ago, we were thinking everything around the world is hunky-dory. Seems like it's not, because Donald Trump says, I doubt China trade negotiations will succeed. The other thing we were watching out for was peace in the Korean Peninsula. That's not happening because Pentagon has no plans to scale back military operations in South Korea. So keeping all these things in mind, the FIIs, they've consistently pulled out money. So in FY19 so far, they pulled out close to 15,400 crores in the cash market. But that's where the pessimism ends. Now the optimism. Domestic institutional investors, they've pumped in 15,900 crores, 600 more than what the FIIs have pulled out. So domestic institutional investors pumping in some money. Strong earnings this week, and individual stocks, they've been rewarded with earnings. And by individual stocks, it could be something as big as Hindustan Unilever, which equated itself, briefly crossed ITC's market cap yesterday to Bajaj Finance from the consumer space. Again, consumer finance space up 8%, and Jyoti Laboratories, since the results, actually has surged 30% after a good set of numbers. Today, we're watching out for Bajaj Auto and Ashok Leyland, both of them expected to post a good set in results because we have the volume numbers already. That is something we have to watch out for. So keeping all these things in mind, while the SGX Nifty indicates a downtick, let's watch out for a couple of these important levels. Currently where the Nifty is at the 20-day moving average, so technically an important level. 10,602 is the May series low. That is something we have to watch out for, whether that gets protected or not. High is a couple of 100 points away, so that is something we'll need to keep an eye out on. If indeed we do break the 10,600 mark, 10,500 has the maximum put open interest, and that is something we've seen over the last 2 series. So that is an important mark we'll have to keep an eye out on. So those are a few levels on the Nifty we'll have to watch out for.
Okay, thank you, Mangala, for that nice roundup with all the updates coming from crude, bond, earnings, as well as the important levels. But other than that, what are the stocks that you're watching out for?
The first stock that I'll be watching out for from the pharmaceutical space is Biocon, because I remember Ekta telling us that, the US FDA is inspecting their Bengaluru facility, and now they've issued 7 observations. So the severity of this we'll get Ekta to explain to us, but 7 observations, just optically the number looks quite scary, so we'll keep an eye out on that. But let's just focus back to earnings. Bajaj Finserv, the top line growth remains strong for both their insurance companies, and on a consolidated basis, we got Bajaj Finance's earnings that have supported the overall numbers. Voltas, unfortunately, it doesn't look like a lot of people bought their ACs because the revenues have come in below our estimates, as have the profits, as you have alluded to, Anisha. Central Bank of India, the same story as far as PSU banks are concerned. The banks reported its highest net loss in 10 quarters, total loss of close to 9,300 crores in the last 10 quarters. SRF, good set of numbers, 22% revenue growth, EBITDA up 19%. Balkrishna Industries, they've reported a 23% revenue growth, but the operating margins, they've come off a little bit, so that is something we'll have to watch out for. But the net profit was supported by higher other income. Orient Refractories, very good set of numbers, 41% growth in the revenues, 56% growth in EBITDA, and net profit was higher by 55%. Lux Industries, again, they've hired Amitabh Bachchan to sell their wares, underwears if you must, and revenues up 27%, 57%, EBITDA up 54%, despite paying a lot, I assume, to Amitabh Bachchan, and the net profit was up by 67%. KEI Industries, look at the EBITDA, close to around 101 crores versus 72 crores, led by higher revenue growth of 30%. Merck Electronics, owners envy, neighbors pride. They make Onida, but looks like this is neighbors envy, owners pride. And the stock now looks like it's owners envy and neighbors pride, because revenue down 9%, the EBITDA is actually down 70%. Coffee Day, the retail business is doing a lot well, so it looks like a lot of people are having coffees at Cafe Coffee Day, because the total income is up 4.5%, retail revenue is higher by 7%. And if you take a look at the same-store sales growth, it has improved both sequentially and year-on-year. Finally, before we end, JK Tyre. We spoke about Balkrishna Industries showing an operational decline, but JK Tyre, the revenues were up 7.3%. Just take a look at the EBITDA. That one grew by almost 200%. And there we have it, 214 crores on the EBITDA.
Let's talk about the big story from the banking sector. Railways and Coal Minister Piyush Goyal, who took interim charge of the Finance Ministry, reviewed the public sector banks that came under the RBI's Prompt Corrective Action Plan. Now, we learned that Goyal has assured that the government will take all steps necessary to ensure that losses of banks under PCA are minimized. Sapna Das joins us now with more details. Sapna, over to you.
Well, the key takeaway is the minister is very confident about at least those banks under PCA coming back on the growth path. Of course, we do not have the numbers. No numbers have been shared with us so far in terms of what those quarterly targets may be, or what are those numbers that they're looking at in terms of bringing down the NPAs, how much of bank credit growth target has been kept, recovery targets, stuff like that. So the numbers are not there, but basically the broad message here is that the government has bitten the bullet in terms of trying to address the NPA problem. That's one. Second, the minister is very clear that the government is completely behind the banks in terms of any kind of support that is required. And in the coming days, possibly you may see that actually unfolding. Now, in what way, we have to wait and watch and see, but that's the broad message from the minister. And of course, it has been a holistic review of all these 11 banks. So we will expect to hear something on those quarterly targets which are being spoken about. And also in terms of the fact that, earlier on we had heard that a couple of them had raised the issue of recapitalization, but there is no confirmation from any of the senior government officials on this front, including from the minister. So we have to really wait and watch and see what happens on that front. Now, this is not the end of it. Basically, government will also be meeting up with the other public sector banks sometime this month. So we have to wait and watch and see how that really pans out.
Okay, thank you, Sapna, for that. But on that note, let's hear out the Minister himself, Piyush Goyal, the interim finance minister, on the state of NPAs as well as the outlook going ahead.
जैसे अंग्रेजी में कहते हैं, somebody has to bite the bullet. और ये एक decisive government है, जो कठोर निर्णय लेने की क्षमता रखती है, जिसने रिजर्व बैंक और सरकार के संयुक्त प्रयासों से we have been able to bite the bullet, but we will ensure that all of this will lead to good banking practices, and will ensure that what happened to the banking system in earlier years prior to 2014 can never be repeated in the future. Highest levels of transparency, highest levels of coordinated working, ensuring that risk management and lending are kept separate so that risk assessments are given importance. All of these and many other issues have been discussed today, which give me the confidence that these banks and all the entire public sector banks will serve the people of India in a very extremely good fashion, encourage growth of industry, support manufacturing, support trade and business, go out of the way to support exports, but all of this done in an orderly, transparent and honest fashion.
Okay, important commentary coming there from the interim finance minister. But moving on then, Finance Minister's 6 non-NTA rule states met President Ramnath Kovind in Delhi regarding the terms of reference for the 15th Finance Commission. Timsi Jaipuria caught up with all the state finance ministers. Here are excerpts of those conversations.
ये जो TOR बनाया गया है फाइनेंस कमीशन का, 15th फाइनेंस कमीशन का, ये कॉन्स्टिट्यूशनल प्रोविजन से भी अलग हट गया है और जो वेल सेटल्ड प्रेसिडेंसीज थे, कन्वेंशंस थी, अरेंजमेंट्स थे फाइनेंशियल, उनको भी तोड़ रहा है। और दिल्ली और पुदुचेरी के केस में तो ख़ास तौर से हमेशा सेंट्रल ने डिस्कशन किया है, उसको भी हमने उनसे रिक्वेस्ट किया कि आप इसको भी कहिए, क्योंकि 17 साल से दिल्ली को सिर्फ 325 करोड़ रुपए की ग्रांट मिलती है, शेयर मिलता है, तो इन सब में आप इंटरवीन करें, वरना आने वाले समय में राज्यों की फाइनेंशियल स्थिति बहुत कमज़ोर हो जाएगी, वो किसी भी राज्यों के सही, किसी भी पार्टी के स्टेट में।
तो प्रेसिडेंट ने क्या आपको अश्योर करा कि बहुत जल्द?
उन्होंने एक एक चीज़ को सुना था, एक एक पॉइंट पे हमने उनसे बात की। ही हैज़ अश्योर्ड कि ही लुक इनटू इट एंड डू द नीडफुल लिफ्ट।
Federalism is being subtly and sometimes overtly or covertly being undermined in these terms of reference. We have pointed to several constitutional areas that are being undermined. That's one. For example, in GST, there was an amendment in the parliament saying what kind of compensation will happen for 5 years. These terms of reference says you may review it. It's totally against the constitution.
So this is an unprecedented move by the finance ministers. For the first time we are seeing finance ministers approaching against the TOR. Do you think that this would be the first and the last time, and soon your suggestions will be incorporated?
I think first of all what is important is finance ministers, Chief Minister Puducherry, Deputy Chief Minister of Delhi and finance ministers of Andhra, Punjab, West Bengal, we came together indicating that it is north of India represented, east of India represented, south fully represented, and most importantly across political parties represented. Let me also say, those who have not here, their silent voices are being heard in our ears, that what we are doing is the right thing. In the 13th Finance Commission, terms of reference given by the President of India was revised. In the 9th Finance Commission, some changes were made. So we are hoping that Honorable President of India, in his wisdom, will look into it objectively, save the state's finances from being badly damaged and federalism being damaged by this process. We are hoping. He was very gracious. He received us very well. He also asked for some clarification in the conversation which we provided. We are hoping in his wisdom he will save the federal polity of India.
The fact that the Finance Commission has already appointed an advisory committee to advise them regarding the TOR itself is a signal that they do understand there are complications related to TOR. That's a good response. So perhaps I'm certain the Finance Commission cannot turn their back to the rising mounting public opinion. Now already Prime Minister has hinted that the Finance Commission would pay attention how to support states which have reached the replacement level. Now, well, that's a good response, but not sufficient enough. We want the Finance Commission to be given the freedom to choose what should be the appropriation rate rather than being dictated by the center.
There have been precedents when terms of reference of various commissions have been changed. And broadly what we brought to his notice was there were certain clauses in the TOR which are actually violative of the Constitution of India. That is one. And since he is the repository of or the defender of the Constitution, he must rise to the challenge and defend the Constitution, and especially Articles 270, 275 and 280. So that was one. The second was that there are certain conventions which have taken root in the last 50 years. And now in upsetting those conventions or laid down procedures of fiscal federalism, they must be defended.
Central finances they want to protect, but state finances they want to undermine, and that's why the balance has to be made, because central schemes are also there and state schemes are also there. Both the schemes, both the government schemes taken up by both the political parties, both the governments have to be protected by the Finance Commission. But terms of reference, if you see in detail, are not like that. They are in favor of Government of India scheme. They are in favor of Government of India finances. They are in favor of government. So that's why today we have submitted a memorandum to the President of India to reconsider and to amend the terms of reference by directing the Government of India.
All right, let's move on to the next story then. A big headline coming in from the resolution space. JP Infratech set to get a huge land parcel back. Why will the debt-laden company get this land and what impact will it have on its books? Manisha Natarajan joins us with the details. Good morning, Manisha.
Good morning, Mangalam. Well, it's very simple. While the resolution process was going on, the IRP or the resolution professional actually noticed that 858 acres of land parcel, unencumbered land parcel, had been moved out of the books into the books of JAL to use as mortgage for raising further loans. Now, the fraud case, it's actually created some sort of history in the insolvency procedure, was filed by the IRP Anuj Jain himself against the promoters of JAL and JIL, which are the same Manoj Kaur and team. And even though JAL argued that, it was really not fraud, it was just getting over difficult times, I think NCLT was very clear to accept the arguments that when JIL was already under so much duress, it was not being able to repay its loans to its own lenders and also not complete the home buyers' apartments, there was absolutely no reason for it to have moved this 858 acres out of its books as a mortgage for a related party, which is JAL here. Important to note that only 758 acres has been ordered by NCLT to be brought back into the books of JIL, and now it seems that there will be revaluation. The bidders, the three final bidders, might get time. I mean, it's already on the table that they will get time because of the Supreme Court order to not liquidate the company. And the value, Mangalam, is important to understand. When this 858 acres was valued, it was for mortgage, it was valued at 5,000 to 6,000 crores. So if we knock off 100 crores out of it, 758 crores is a lot of money. It adds up to another 3,000 crores for the valuation, insolvency valuation of JIL.